Howdy, Jacob here. Today we're looking at Ramaco Resources, ticker symbol METC. We're looking at an $866 million market cap, $891 million enterprise value. Not a whole lot of net debt there. Just above 3% on the dividend. So not a crazy huge dividend, but not enough to meet the screener, but still a good amount, well above market. Percent held by insiders, 10.4%. I usually look at this. I haven't really focused on that in the videos. I've been focusing on that for like deep dives, but for smaller companies, you definitely are looking for. It's definitely nicer to have a high insider ownership because that means the management's going to likely do more positive things in relation to shareholder value. So metals and mining industry, it looks like they develop and sell metallurgical coal. Oh, geez. So they sell coal and develop and operate it out of West Virginia, Virginia area, like northeastern United States. It looks like company was very new, founded in 2015. Interesting. So very very young company. Uh, Very high returns on invested capital. Between 2018 and 2022, there was one down year, but outside of that, well above 15%, likely above their weighted average cost of capital. So they're producing true business. 36 million in cash equivalents, 52 million in long-term debt, 5 million capital leases. We definitely want to see free cash flow above 10. Okay. Last 3 years, well, I guess last 5 years, 2018 to 2020, they did not produce positive free cash flow, but then 24 million in 2021 and 67 million in 2022. So we're just the 23 million payout in comparison to rolling 12 in 2022 is pretty reasonable, under 50%. But if you look at a 5 year average where they did not produce free cash flow 2018 to 2020, then that doesn't look as attractive. However, we do got to keep in mind the business was started in 2015, so there were likely a lot of investments into growing the company itself, and so that would have likely hindered their income and free cash flow. They haven't issued too many shares, which is good. Looks like once they went public, they've definitely been increasing shares, but not excruciatingly. Stock-based compensation upwards of 12 million in the rolling 12. So that's been increasing pretty heavy, but again, they have a lot of insider ownership, so they have a lot of skin in the game, which is good for the investors. And so I think we can start making some assumptions here. I think I'm going to stick with the 55 cents that there are now, just because I definitely don't plan on increasing it because they just don't have enough history. And then um, just because this isn't necessarily a buy price, just to look into further, I'm just going to keep it as what it is right now. As for revenue growth, I mean, we're looking. It's so new. It's just really all over the place. It's increased a bunch recently through a little bit of acquisition, but I might say it's just been so high recently. I feel like it's going to be a volatile industry and the seasonal one. So maybe I'll say 0%, 10 on the P and price free cash flow, saying it's going to go down maybe in a little bit, but then come back up over a 7 year period to pretty close to what it is right now as per revenue growth. And then as for margins go, I might just take an average here. Free cash flow has definitely been worse in the whole period average, but if we look at more recently, they've been a little bit closer, I guess. But maybe I'll say 10%, 7%. Like I said, issued a bit of shares, but not so much. It's necessarily worrisome. But this gets us to a price with these assumptions that it's going to have to fall 70% before we get a 15% return here. I think it's just too new. I mean, I definitely prefer long histories to make assumptions on for companies, and this company just doesn't have that. I mean, if you're in the industry, you know more about it. Kudos to you. I think you're going to do a way better job of getting to values that are more appropriate. But for me, not knowing the industry as well, not knowing this company as well as it's so new, I think I'm going to settle with these conservative assumptions and just wait until it falls quite a bit. and just not be worried about it. There's so many companies out there. I'm just gonna review the ones that make sense to me and are at an attractive price. So thank you, and I hope you have a great rest of your day.